are the top four pairs that I'm going to simply simply analyze with you. So one of the pairs was volatility 75, and we are currently in a trade. We took a trade in the morning. I gave you a buy in the morning on volatility 75, and right now it's a risk-free trade because the stop loss right now, as I said, put your stop loss to empty. So meaning the stop loss roughly right now I can say it's somewhere around here, which is the empty. So this is a risk-free trade right now. This is now a risk-free trade. So a risk-free trade is simply a trade whereby your stop loss is now on break-even, and you no longer have anything that you are risking on that particular trade. So it's one of those trades. So this one's a risk-free trade. The advantage of risk-free trades is that you can actually hold them all the way to the particular take profit target. For example, this was the first take profit target that I placed according to the signal that I gave. This was the first take profit target. This one is the second, and this one is the third final take profit target. So VIX75, I've been analyzing it for quite a while. If ever you really want to see our analysis of VIX75, go and watch our recent videos. You actually see the overall analysis. Why did we buy here? That's why you're actually going to get a better understanding there from just the previous YouTube videos that we had. We actually analyzed VIX75 fully. So let's move on to the other three pairs that you guys voted for in the free group. So in the free group, you voted for which else? Let me see. You voted for volatility 75. That's number one. Number two, we have crash 300. Crash 300 is on number two. So let's go quickly to crash 300. From crash 300, we'll go to crash 500. From crash 500, then we'll go to boom 500. So that's the order in which you guys whoever has their mics on, can you please switch it off so that we don't have any noise disruptions there? Right. So this is crash 300. I will be so blunt and I'll be so quick. If ever you develop any question along the way, you can simply type the question in the chat box there. If ever I'm still presenting and you develop a question, you can simply type the question in the chat box. Then I will respond to your particular question. So I will be so fast. So make sure that you listen attentively and you pay attention as much as possible. Right. This is crash 300. I'm on the daily time frame. This is the daily time frame, and crash 300, as you all know, it was actually a new pair that was introduced in the crash and boom pairs, right? So right now it seems like it's almost at its lowest prices, right? If you look at it, this is almost the lowest that it has ever been, and so that is also something that we must also consider, and that if ever there's anything that is going to happen, we are most probably bound to have some reversals to the upside. So those that are in the mentorship class, they are aware of the way that I'm analyzing here. I'm not going to waste much time there. The way that I'm analyzing here. So here, in this case, this is a break of structure. Why is it a break of structure? We call it a break of structure because we broke this. This was a swing lower low. This. Then here at the top here, this one is the swing lower high, lower low. Then now, once we have a lower low, market must go up. Once we have a lower high, market must go down. So now, after this break of structure, most probably we're expecting some reversals into this extreme supply, and also some immediate buys into that first lower supply there. So this one will be your first target. because remember, when we are going down, we don't go down in a straight line. It's push, pull back, push, pull back, push, pull back, push, pull back, just like that. That is what we call bearish order flow. Right. So in a bearish order flow, in this case, the any pullback that is bound to happen, first target is here, maybe before it comes down. But this one is my final target if ever it's going to continue in this bearish order flow. So that would be my final target for the sales. So meaning they will be expecting this one to be our lower high, and it comes and breaks this this lower low here. So that is the current lookout. That is the current first most high probability lookout for crash 300. So now for us to be sure now that this is about to go up, we just need to look at market structure, internal structure. Right. If we follow internal structure, that's where we now need to go down to other time frames like your 4-hour or even your 8-hour time frame, because that's where we're going to see clearly this internal structure clearly. Let me go down to an uncommon time frame, which is the 8-hour time frame. Most people they rarely go to the 8-hour, but they don't even realize that it's one of the most powerful time frames that you can ever look at when you're analyzing, because it's so stable. The same stability that is there on the 4-hour time frame is also the same stability that you find on the 8-hour time frame. This is the 8-hour time frame, as you can see, and my zones, they are so clear on the 8-hour. So on the 8-hour, if we follow internal structure, which one is internal structure? This one, lower low, lower high, lower low. Right. If you check this lower high here, internal lower high was broken there. Right. That break there, if ever you have been following, that's why I always recommend, if ever, even if you're not part of the full course mentorship program, try to even be part of, don't make sure that you don't miss the signal, the YouTube videos. If you miss any YouTube video, just by you watching the YouTube videos, you can actually gain some value. Obviously, it won't be the same value with people that are in mentorship, obviously, but it will be something. It will be something. So if this is just an advice to people that cannot even afford, I'm just speaking to those who can't afford to join either the signals or to join mentorship. Just go to the YouTube channel, get these breakdowns. Once you see these breakdowns, get some form of value, because the most important thing is to gain value. If you don't gain any value and if you don't gain any knowledge, you are bound and you're at a risk. You're at a risk. You're at a higher risk of losing money in this game. You are at a higher risk of losing money, more than someone who is informed, more than someone who is under mentorship. So this break of internal structure here is what validated this law as our swing lower low. Right. Once we have a swing lower low, those that are in the mentorship, you know that once we have a swing lower low, market must go up. Right. So it was validated here. After it's validated, we expect always a pullback before a continuation. So where are our targets now? My first target is this highest point before the market dropped. Right. So after this change of character here, right, all you just needed, for example, in this case, this was going to be an extreme entry point if ever it came to test this low. If ever it came all the way, you want to buy there, because if ever it came all the way then failed to break there, it was still going to go up. So that was an extreme entry point that you could have added. Then other entry points, you can go to 4-hour, you can actually realize that somewhere around this region, there was some form of demand there, or some form of support on this particular zone. So it has tapped into the extreme zone. Now it's time to go up. So that's the first target will be this one. Second target is this supply here. So already I'm giving you third target that's there at the top. I'm giving you, this is a setup that can hold for the whole week, a setup that can last for the whole week. After this change of character, whatever happened going down, was simply internal structure. Whatever was happening going down was simply internal structure. So after this break, change of character, all this, I consider this as a pullback. Change of character, it means this was our previous lower high, and we now have a new high. Where is our new high? Is this one, right? High, higher high, with a low and a higher low here. Right. Once we have a higher low, market must proceed and give us a higher high, which is higher than this one. So you see the pattern. So once you come there, maybe it can actually give us a drop, coming to give us maybe a higher low. Once we have that higher low, that's when we can even proceed all the way to that extreme supply, which is there, give us a higher high at the top there. So that is the pattern. That is order flow. That is what we call order flow. That is what we call order flow. That is how the market moves. The market doesn't move in a straight line. It moves in that wave. It moves in that order flow way. So in this particular way, in this particular sense, this is my higher high. This is my high. This is my previous low. So now, here now, for this to be qualified as a higher low, it must have broken internal structure. So now, that is when because if you check here, if you look at this previous lower high here, this was a lower high, came, failed. So that failure to break there, it's actually a sign that most probably it can even drop and go up like this. That is a possibility as well. So the purpose of analysis is to open up your mind to so many possibilities that can happen on the market. So on the 8 hour, we are done. On the 8 hour, can you please mute your mics? Can you please mute your mics? Right. So on the 8 hour, we are done. We've gathered almost all the details that we need on the 8 hour. This is the extreme lower low, right? This is the first target that we'll be targeting for our buys. Second target is that level there. Can you please mute your mics? Right. So first target, second target, like that. So those are the target points that I will be targeting for the buys on crash 300. So after having done all this, the most important thing is the entry point. It's the entry point. You don't just jump in. You don't just jump in just because you heard that this market is a probability of going up. You don't just jump in. So now, what I like now, this is the 4 hour time frame, right? The 4 hour time frame, you can see that we actually came back into this order block and tapped into that order block. That was a very beautiful buy that one could have taken, because those extreme order blocks here you could have bought, and here you could have also bought. So that was a simple entry point. Here you could have bought, targeting this high here. It was reached. Same thing, came back, you bought, targeting this high here. So both entries were actually valid. So this is a form of a double bottom. If you look at it, form of a double bottom. A double bottom is a reversal pattern. Those that are in the mentorship class, you know this, right? So this is my structure now. This is my high, which is my first target for the buys. And now we need to see, for example, in this case, I can see that I have a demand here that was left behind. This can also be a very beautiful entry point, right? So I want the market to come and break this. Either it comes and breaks there before reversing back into the demand, or it reverses back into the demand, then goes up. Whichever way, so long we come back into this demand, I'm expecting to take buys from there. That's a high probability entry point there. So that's actually a high probability entry point that someone can actually place some pending orders just here. Obviously, our entry points, our entries, we take them obviously on lower time frames, your 30-minute, your 15-minute, sometimes you're even your 1 hour. The purpose of entering there is just to minimize the stop loss. There is no other reason but just to minimize the stop loss. So this is a demand that was so this is the outside change of character, but the inside change of character has already happened, which is this one, right? Inside change of character. This inside one didn't have a pullback. So this pullback, this market can actually drop down into this demand because of this inside change of character. Inside change of character, then pull back. Once you pull back there, you can actually take buys there. Here can be your first immediate target, second target, third target there at the top there. So this is the analysis for crash 300. This is the analysis for crash trend. This is the entry point that you can probably wait for. Wait for this entry point. Wait for this entry point. This demand here. Remember, the market makers, they always prefer to buy from a discount zone. What is a discount zone? A discount zone, it's simply a zone that is below the 50% Fibonacci retracement. So yeah, in this case, if ever it's going to retrace from there, it would be point A from down there, point B to that top there, like this, around 78.6. That's where our entry will be. So it's a simple structure. Wait for this demand is one of our entry points. If there are any changes along the way, we'll simply be noticing those changes. But so far, this is the high probability entry points that you can wait for on crash 300. So the most pro or the one of the challenges that most people have is the waiting for that particular zone. That's where most people lose money trying to take sales, funny sales, funny trades along the way up there. And that's where most people lose money. So it's better for you to wait for a major zone like this. This is the first major zone that I'm seeing for a buy. There's no other zone here that you can buy than this zone. If ever you didn't buy here, you didn't buy here. The next zone is this one, right? So you missing out on this and this, it simply means you still lack knowledge. There's still a lack of knowledge on your side. You're missing this buy and this buy. So I'm now giving you another entry point. If ever you missed this and this is the other entry point for the buys. Wait for this. Once it comes there, then we go all the way up. This is the structure. This is the analysis for crash 300. If you develop any question, ask me as soon as possible. We are now moving forward to crash 500. We are now moving forward to crash 500. Crash 500, right? Crash 500 is also a good pair. It's also a good pair. If you ask me, it's a good pair. It's actually more stable compared to crash 300. Especially if ever your account is small, make sure that you play around with pairs that are not that vicious. Crash 300, comparing it to crash 500, it's very vicious. Crash 300 is very, very, very vicious. So overall, if ever let's say someone has this knowledge, this is basic knowledge that one must just have. This is basic understanding, whereby you can see that this is bearish, this is a bearish market, and when you look at it from our perspective, you can actually see that this is a bearish order flow market, right? Because it was breaking the swing lows, which was the swing lows. This was the swing low there. So that was a swing lower low. I can label from the top there, but no need for me to label from the top. Like I only need this recent one. Swing lower high. We drop, we go down. Lower low here and lower high here. And let's go down. Let's go down. So going down, let's zoom in and see. Let's zoom in and see our structure. Right, zooming in and see and looking at our structure. We want to see which one is our uh, lower low. Lower low, this is a lower low because it broke internal structure. This is a lower high because it broke that lower low. Right. So this understanding that this is just the way I'm analyzing here is just quick, obviously, but these setups and these analysis, they are deeper than what you are seeing. That's why I always recommend the best thing that you can ever do for yourself. The best thing that you can ever do for yourself is to get mentorship from the right sources. Get mentorship from the right sources. That's always my advice. No matter how much you take signal, even if you take signals, but those signals, they are not going to help you reach consistent profitability so long there is a leakage or a shortage of certain information that you don't know. So this is our swing lower high, right? So we are still in a bearish order flow market. Swing lower high there. This is the previous lower low. So now looking at what is happening, it's just a bearish order flow market that was push, pull back, push, pull back. It can even continue like this, right? But we are not sure if it was going to continue like that, right? So the only way we are going to be sure that it's going to continue falling is so long it fails to break this lower high. It means even if it comes and tests it and drop and closes below, it still can continue dropping, right? So it's still a bearish order flow market overall, looking at it from a higher time frames. And what I like here, we are currently at this. There's a supply zone there. This one was mitigated. This one was mitigated. And the supply zone where it is currently. What I mean by mitigated, I'm simply referring to the retesting of a supply. This was a supply here. Supply, it was broken out. Then the next candle retested it. This one was broken out, came back and retested it. So all these were simply entry points for someone who is smart enough that you could have actually sold. You could have actually sold there. You've actually sold here as well. So now we are here. This is actually a very beautiful selling opportunity. Why? Because the order flow is still bearish. Order flow is still bearish. And so if ever we sell from there, where is our target? Our first target is this low here. Because the order flow is still bearish. When order flow is still bearish, we expect the lows to be broken. We expect the lows to be broken. So in this case, this was a break of structure to the downside. That's a break of structure there. Break of structure. That's a break of structure to the downside. Pull back. Then from there, it can even continue dropping. So the reason why I drew these two trend lines in the beginning is just to show you that if ever it's going to continue dropping, it still has a room. Maybe it wants to tap into this bottom trend line before major push pullbacks to the upside. That's just the purpose of those trend lines. That's the purpose of those trend lines. Those that are in the mentorship, you are aware of this, that when you have two major trend lines like that, the market will always prefer to tap into those before any major reversal. So this is what is currently happening internally. We're currently at a major supply zone there. And from there, sales can actually happen. The market can actually drop, break here, pull back, break, because this is bearish order flow. And bearish order flow, the market doesn't move in a straight line. It actually moves in that bearish order flow manner. So we are currently at a zone, very important zone there. Very important zone. Let's go down to 4 hour time frame. 4 hour time frame. So what you just need now, if ever you've realized that on a higher time frame, for example, which is on the daily, you are at a major zone like that, which is here. You're at a major zone. Once you've realized that you're at a major zone on a higher time frame, all you need on a lower time frame are simply now you now need entry confirmations. Basically, you just need entry confirmations. What are the entry confirmations that I'm looking for here? Internal change of character and internal change of character on 30 minutes or 15 minutes or even 1 hour. Internal change of character, that's what you need for you to sell there, right? That is what you need. So we're at a zone there. We're at a zone. You can see this is the zone. And all we just need are those confirmations for us to enter the sales targeting this low. Right. Anything else not to take note of here on the 4 hour? Nothing basically. So let's go down to 1 hour, 30 minutes, 15 minutes. So if you notice between crash 500 and crash 300, already we can place a judgment to say crash 500 right now is more ripe to take a trade now more than crash 300. That is it actually takes a skill to know. It's actually an art to know that which one of all the pairs that I'm trading, or of all the pairs that I've analyzed, which one is more ripe to take a trade now. Most people, they don't have that skill, they don't have that ability. You just want to enter, and most of you enter the one that has the least probability of entry for that particular moment. You enter those setups the ones that have least probability of entry. You are busy following those. It's like measuring in minors. Measuring in minors is whereby you are measuring in a pair that has the least probability of entry for that particular moment. You are busy measuring in that pair. So that's one of the mistakes that many people they make. That's one of the mistakes and the errors that many people are making. They quickly focus. For example, right now, according to the simple analysis that we did, crash 300 is still yet to come into our zone, right? For those buys, it's still yet to come into the zone. And here, if we follow internal structure and we analyze crash 500, you can see that crash 500 already it's in the zone already, right? So either you could have sold there, the stop loss above. Those are what we call risky entries, risky unconfirmed entries. There are also entry points that one can actually take, whereby once the market comes into a major zone like that, all you just do is to, once you get the entry point, the top loss, you place it above the zone. For example, the person who sold here, they are currently in profit right now, and they can even lock they can actually set their stop loss to break even. So in this case, where is our previous higher low? Our previous higher low is this one. Our previous higher low is this one, because it's the one that broke this high here, right? So remember, and if ever you're part of the class, you know that so before the market goes anywhere, it has to collect liquidity. In this case, it was wiping out liquidity of this size, wiping out liquidity. And most probably we can say maybe 2 hours to go. So sometimes you can even come back and test this level. Sometimes you can even come back and test that before going down. Those are other possibilities that we just need to keep our mind and alert of, whereby the market can coming back there, it will be wiping out this trend line liquidity. Trend line liquidity, I'm referring to these people who are following trend lines like this. It will be wiping out all their stop losses, stop loss, tap into the zone, then drop. That's also another possibility. So in that case, it will be a double bottom. It will be a double top, because we'll be having this and that. Once you have that, you can actually sell as well there. Once you sell there, your stop loss is just above there. Stop loss above there, then you will just hold all the way to those targets that we drew there. So this is also a possibility, wiping out of this liquidity before continuation down. So this is a level that I want to be broken. This is a higher low that I want to be broken. Once this one is broken, that's the change of character. Change of character simply means if ever we're going up, it's not time to go down. If we're going up, it's not time to go down. So that's a zone that I'm expecting the market to tap to break this one, this higher low. So once it's broken, change of character, maybe a pullback. Once you get a pullback, you can actually enter on the pullback as well. So, but that change of character must happen. If ever that change of character hasn't happened, the market will simply play around. Do you know that it can even play around consolidating in this zone? Consolidating in this zone, as it will be consolidating in that zone, it will also be taking out a lot of people. A lot of people will be taken out if ever it consolidates and consolidates before that ultimate change of character. That's why you must wait for a change of character. Waiting for a change of character, you're simply helping yourself not to be part of any manipulations that happen in form of consolidation or in form of fluctuations. So here, either it's going to come back there, you can take yourselves there, but this change of character, it must happen. This change of character must happen. If ever you're going to enter sales that you're going to hold, wait for this change of character must happen. So that's what we are seeing on 1 hour. Those are the details that we are seeing on 1 hour. Let's go to 30 minutes. If ever there's anything else that can be spotted from the 30-minute time frame, if ever there's anything else that can be spotted from the 30-minute time frame. So based on what we've just analyzed, is there anyone that has a question? Is there anyone that has any question based on what we have just analyzed right now? Is there anyone that can say, I have a question, or I need a certain understanding in anything that I've just spoke about? Anyone that has a question? Anyone that has a question? Anyone that has a question? So yeah, it's simply the same thing. It's still the same thing. This zone, the reason why it can come back here is simply to wipe out this trend line liquidity, come back into this same supply that was tapped yes, but you can simply also come back and tap it, giving us a double top, just for the purpose of wiping out this liquidity. They like wiping with liquidity. They like wiping liquidity. So in that case, where is your first entry point that we are most probably looking at? We're looking at that one. This is an entry point that we're looking at. And also this one. This one is an entry point that can also be that is also valid. This one is also valid, a valid sell entry point. That one as well, it's also a valid sell entry point. Especially if ever this market comes, once it establishes a change of character, comes back into that zone. Oh, that will be a very beautiful selling entry point there. So those are the two main entry points that I'm looking at. That one at the top and this one. Those are the two main sell entry points that I'm looking at. And if you check, I'm not even talking about these trend line entries because I know what happens with those entries. I know how they like to wipe out most of those entries as liquidity. So those are the entry points. But I want to see this change of character. This change of character must happen in order for us to be guaranteed that we are now going down. For it to confirm fully that we are now going down, it has to wipe out this liquid. It has to come and establish this change of character. So what one can do is simply to wait for the change of character. Wait for the change of character. Once it has happened, you know that there is a high, all the other entries that I'm going to enter are now higher probabilities. That is after the change of character there. Your entries will now be higher probability more than before a change of character. So I think those two analyses for today, I think they are fine. I think they're okay. Anyone with a question? Anyone with a contribution? Anyone with a comment? Whatever, before we close. Anyone with something to say?
No, Michael, thank you.
Wonderful, 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 Mr. Tristan. Anyone else? Anyone else with anything to say? Anyone with a question? Chat,
No. Thank you.
wonderful, wonderful, wonderful. So that's the analysis for crash 500 and crash 300 that we're currently looking at. So if ever it will be best for you to go even to the because this video are going to put it on YouTube just for you guys to go back and revisit the video so that just in case you forget the entries or you forget the zones that we mentioned, you can simply go back to the video, watch it again. Once you watch it again, you gain more clarity. Once you gain more clarity, it means you are also going to be at a lesser risk of encountering unnecessary losses like what most uninformed people are doing. They're just encountering losses left, right, and center out of their lack of knowledge. So just you revisiting the video, it will help you. It will help you in a big way because you actually hear something that you may not have heard in the first segment, something that you missed. You might have missed a certain point as I was talking right now. But when you go back now, when you go back to the video, you actually get that point that you would have missed in my first in my as I was talking. So that's why it's so important to revisit these videos, revisit because you gain more understanding. And let me tell you one secret that you don't know. The more understanding that you get, the more understanding that you get on the market is the higher your probability of success in the trading space. The more understanding you get of how price works, of how the market moves, the more understanding you get of that, you're actually increasing your probability of success in the game. You're actually raising your odds of success more than the majority of people who don't understand how price moves, how the market moves. That's why it's always important to seek understanding, seek knowledge, focus on understanding, focus on getting knowledge, focus on getting understanding, focus on getting knowledge. Once you do that, you realize that money will just be a secondary thing that will simply follow you because of the understanding that you'll be having and the knowledge that you'll be having. So someone with knowledge and with understanding can trade. I can say they can trade any amount of money. I can confidently say that someone with knowledge, the right knowledge and the right understanding they can trade any amount of money and actually make money out of the market because they have the correct knowledge. They know when to buy, when to correctly buy, when to correctly sell, and they know also when to wait. When you know when to buy, when to sell, and when to wait, you're now a professional trader. And when you're not a professional trader, there's no other option than for you to make money out of the market. So guys, we are done for today. We are done for today. Just make sure you repeat the video, and you actually gain a deeper. The YouTube link will share it in the free group as well as in the Telegram. You get the YouTube link just now. So I think we're done, guys. We're done. We're done. See you in tomorrow's session. See you in tomorrow's session. See you in tomorrow's session. See you in tomorrow's session.